Thank you very much, and thank you all for being here today. We call this the C-suite panel. It was a huge success last year. The reason why we're back with such a fantastic panel again this year, we call it the C. I would say C stands for Cauchon, so welcome to the Cauchon Suite panel. We just have 40-45 minutes left, so I'm going to ask the panelists to be brief in their answer. I'm going to be a nice guy, but I'm going to be as well at the same time the timekeeper. So if you want to make sure that we can hear each and every one of you on all the questions. Of course, this year, as usual, we're going to be speaking about the Canada-China relationship, the state of the economy in the world, the economy in Canada, and as well what's going on here in China, the increasing trade between the two countries, and therefore the various challenges that one may be facing when they decide to invest in Canada or in China. And as a result, I mean, we have actually on stage 4 fantastic executives. And of course, the opposite country plays a major role in their daily life. And the first question, and the answer will be 2 minutes. I'm going to ask you, how your role is now different, considering that, for example, John Manley, China plays is our second trading partner, therefore it plays a major role for all the Canadian businesses that you represent. So how that has changed your daily life, actually?
Well, very quickly, who I represent is 150 CEOs of Canada's largest companies that collectively would manage about $4.5 trillion in assets. They would have annual revenues of about $850 billion, and they employ 1.5 million Canadians. So they are a major component of the Canadian economy, and they are looking to China certainly as a market, certainly as a source of investment, and certainly as a place where they can build supply chain relationships. Investments, Nexon is one of my members. Very happy to receive the CNOC investment. Tech Corporation is one of my members. Very happy to receive the CIC investment. Others are both in the natural resource and other sectors, especially in food processing, looking to China as a market. Some others are investing in China to access that market, particularly in the automotive sector. So companies like Magna and Linamar, Bombardier are here not to make things to put in final assembly back in Canada, but to supply the Chinese market. So as a developed economy, virtually every layer of the potential of a relationship is important for Canadian businesses that are looking west now rather than simply south.
So, your COFCO has a direct relationship with the consumer marketplace, obviously, on both China and Canada. So, what role does Canada play in the daily life as a chief executive?
Well, Canada plays a very important role in Chinese people's daily life, because Canada basically means food basket for China people. Because over the years, COFCO has been importing over 100 million tons of wheat from Canada, and Canadian barley enjoys the most popularity in China. And also we import Canadian canola seed, and canola milk. Seed means a crushable oil for Chinese daily life cooking, and canola oil also means milk for China, because we'll be trying that with the industry in Canada and also the embassy here, and working together with Chinese dairy industry. So COFCO also in Manley, we are the largest shareholder, so we'll be working together with the Canadian industry to try to promote more Canadian product in China.
Mr. Milroy, you're based out of Toronto for BMO Capital Market, a bank that's very much involved here in China, and you've been in China for a while as well. So what role actually China is playing in your daily life as the chief executive of BMO?
Well, I think the reality of China as a market and as a global player obviously affects our business every day. So we're closely involved in watching what's going on. More importantly, we're a bank who's had a long historic relationship with China. Going back to 1818 when we financed our first trade deal with a Chinese counterpart. Today, I think we are probably the most entrenched bank in China's
Mr. Lee, I'm going to ask you exactly the same question. Of course, one would be tempted to ask you about the role that Canada is playing in your daily life, but since you're also chairman of Nexon, it could be the opposite. So I leave the choice to you.
First of all, the Canada for us might not become one of the most important investment destination after we acquired Nexon. Many years ago, we looking where for us to grow. Canada is the second largest oil resource, in the world, and also Canada got a very good investment environment. Then our involvement with Canada is back to 2005. Then this is how we started from Canada. Then after Nexon, then they changed our one of the things for me, I spend more time in Canada than I used to. And this year I have been traveled to Canada more than 3 times, and more than I spent Canada more than 1 month. So probably looking for future, then I probably spend more time in Canada. A lot of opportunities.
Thanks. Now we're going with the first question to John Manley. 3 minutes. John, about a year ago we had exactly the same session, and if you remember, the discussion were about, of course, the international crisis, international marketplace facing major difficulties. And when we were looking at China as well, there was, needless to mention, many challenges ahead of them with the reform taking place. Of course, they were going through a transition. Now, today we're a year after. I wouldn't say that the crisis is totally over, but there's a slow recovery. Canada is facing as well in terms of the economy a soft landing. The new government is there, implement reform, and they will launch pretty soon as well new sets of reform. As an executive, John, and of course you're going to be speaking for your members as well, what's your perception of the macroeconomic situation in the world, and as well your perception of the Chinese economy?
Of course, this is something that's changing literally while we sit here. It's now 5:20 in the morning in Washington, and the congressmen are starting to wake up, and let's hope that they wake up, because in fact the greatest global risk that the world economy faces right now has nothing to do with slowing growth in China. It has everything to do with the debt crisis in Washington and the United States' ability to manage its own affairs, which is a risk factor that most of us never thought we would face in our lifetimes. I think what we are seeing in China is a renewed commitment to continuing growth by the new government. As we heard in the second panel, there's a lot of information still to be gleaned about what the nature of the reform package really would be. But to see growth slow to the consensus level of around 7 to 7.5% is not something that would alarm any of our members. That's still a very strong growth in China and throughout Asia generally. So I think that as people look at the world today compared to last year, I think there's a diminution of the risks in Europe, as we've seen Europe struggle with its particular financial crises in different parts of the Eurozone. We have this hopefully temporary seizure in the United States. Other than that, underlying growth in the U.S. looks pretty robust, and we've got pretty strong growth continuing to occur in China. So I think most of the CEOs that I represent would be pretty optimistic overall about where they see macroeconomic prospects leading them.
Thanks, John. Mr. Yu, I mean, basically almost the same question. Of course, major reform in China, opening up doors as well in terms of trade, FDI to foreign market. Recently, we saw the the free trade zone, a new pilot project in Shanghai, something very interesting for DI as well. So when you talk to a leader of the business community here in China, they're very confident about, first of all, the Chinese market, Chinese domestic market, and as well about what's going on in the world, the global economy.
Well, Martin, I think for China economy, I think I'm quite optimistic about China's economy because the new government, they are quite sure to lead Chinese economy to a certain level. Certain level that means stable economic growth. So I'm seeing that the new government started talking about the urbanization. I think that's going to be a very big drive for Chinese economy. Because with the first half of this year, we're seeing the economy is kind of slowing down. The government is tight on money policy, is a kind of slowing down government spending and government investment. But now you're seeing that the picture has been much more clear. We're seeing money policy is clear, the government investment is clear, and urbanization will drive a lot of government spending and investment in infrastructure. And you have to build cities, you have to build roads, you have to build a hospital and schools. I think that's going to drive the economy very well. And also with urbanization, people spending on daily life, especially on food quality, on food safety. People are going to pay more on food safety, pay more on the on security. So we're seeing COFCO as a company in the food and agricultural business. So we're seeing that that growth and that demand is coming up very quickly. So but still you got a lot of rules. Take milk for example. Today China is about about 20% of Hong Kong consumption level. But compared with Canadian and U.S. level, probably China is only 10% of the level. So I think domestic consumption is also very strong demand with urbanization, and also you talk about the free trade zone. I think that is a very big potential for the open door policy, because open door policy in the first stage is more about open factories here. But here you're seeing the new state open door policy. And I think that the state right now is coming more to the financial sector, to the logistic sector, to the more like a high level of the economy, and banking and insurance. And I think that is much more room to go. So I think that is the new government pushing the new areas, take more potential for Chinese economy. So I think that's quite important, because China's economy right now is still in the transition period. So all those demands, we are lucky. We have a joint venture with Tom, with BMO, in the trusting industry. I talked to Tom a few minutes ago, so that China, we are in a transition period where the economy is growing. There's a lot of products very close to China economy, and also there's a lot of new products. Compared to China market, Tom and BMO has got in Canada, and they can bring the product to China. So if we put these two things together, that's going to be a very big drive for Chinese economy. So I think I'm very optimistic.
Thanks a lot. Maybe we're going to get back a bit later on about that question of the free trade zone in Shanghai.
Okay.
Just to have a bit of more details about that. Mr. Lee, I guess many journalists would like to sit in this seat today to ask you the question. About a year ago, we were having exactly the same meeting, and I'm going to tell you something. A year ago, everywhere in China and in Canada, people were talking about the same deal. Of course, the deal that you led a fantastic team, and you landed as one of the largest single transactions outside China ever. We're glad that it took place in Canada. That was very symbolic, the relationship that Canada and China should have, as a matter of fact. Of course, when you land such a big transaction, you knew at the very beginning when that happened, there was a lot of challenges ahead of you. The question of integration, getting involved into a different marketplace, different culture, and of course, I'm sure that today you're still working at it. So the question is that, how do you feel about the transaction almost a year after? And if you look at the challenges where you were a year ago and now, have you encountered challenges that were basically totally unexpected to your team, and how did you succeed in going around these challenges?
First of all, I would take this opportunity to thank you all for supporting us. This deal is the largest transaction between Canada and China. Also, it's the largest nation Chinese company ever made in terms of acquisition. This post-integration, I always say, just like marriage. The marriage without knowing each other well. And the marriage is between Chinese and Canadian. We know Nexon quite a little bit before the acquisition. We have been participate 35% oil sands in non-egg, partnered with Nexon. Also, we had some investments in a partnership in Gulf of Mexico. We know a little bit, so we get to know each other a little bit. But so far, the last 7 months, the acquisition, in the integration process, going quite smooth. The challenge is always there. It's not only the culture difference. It's the people like us working in the oil and gas industry. We always face the same challenge. The challenge is how we're able to monetize the subsurface. This is a big challenge. So our case is not different. The process is going well. We facing the culture differences, but I do not see a big challenge in this regard. Actually, as a matter of fact, we see diversity makes the team stronger. And plus, we have quite a strong management team and very good, talent employee working in Calgary. And the process right now is still going well. And give you two numbers. The employee turnover rate is much lower than before after the acquisition. And the performance actually is meeting our expectation. Just to take examples, our performance, production performance in North Sea is production efficiencies reach 3-year high record. That means the integration process is going very well.
So congratulations again for a wonderful deal, and good luck to you and your team. Mr. Milroy, I'm going to change a bit the question that you expect. BMO played a major role in the transaction. And of course, following the transaction, we know what happened. We know, with foreign direct investment in Canada, we have the Canada Investment Act. The government changed the guidelines as well. Because when we talk about natural resources, whether it's in Canada, Australia, or the States, it's always something very, very sensitive. So from your point of view, when you talk to the business community across Canada, what's the perception vis-a-vis the deal a year after? Is it positive? Is it negative? And what would be your comments about that?
Yeah, I think it's important to remember that there's always been an understanding amongst Canadian business executives that we need capital, wherever it comes from, in order to develop our resource base. So as Mr. Manley mentioned, not only was Nexon grateful, but so was Tech and so were others. So that part, I think, was from the outset recognized. I mean, we need capital wherever it comes from. I think that the proof has really been in the pudding about how people see it, because what's happened is everything is going the way that someone said it would go. I mean, the jobs are still there, the management team's intact, they're in the community, they're in the business community, they're building relationships, they're in the community both as members of the community, but philanthropically carrying on a tradition that Nexon always had. So I think, that it's viewed across the board as a great success. There's obviously what came afterwards. It created a certain amount of uncertainty for what comes next and who can do what in Canada. And I'm not here to say what the regime should be, but I would argue very strongly that whatever the regime is, it has to be, transparent, and the criteria have to be well understood. And when we get there, then we'll get back to where I think most of the business community that I encounter would say, now there's a chance for people to know what they're doing, what they can and can't do. Uncertainty is difficult. But in terms of the CNEXIM transaction, I think everyone would agree. I haven't heard anyone say anything other than it's been a win-win.
As you said, the proof is in the pudding, and I'd like to have the recipe of the pudding because it looks like a very successful transaction.
All the credit goes to my neighbor here.
John, for the organization that you lead, actually, is also probably first and foremost, a policy organization, giving advice and policies at Canadian government and as well provinces. And following the CNEXIM transaction, I just mentioned it, there was a reaction. Of course, the Canada Investment Act is what it is, but then after they brought some amendment to the guidelines that really had an impact on the SOEs. Do you see that as a shift in terms of the approach for the Canadian government toward the SOEs? What would be your perception and your comments as well about the new guidelines?
Well, I guess first a little context, Martin, because I was the industry minister for 7 years. So probably in the history of the Investment Canada Act, I had responsibility for it for longer and dealt with more transactions than anybody else. I have to say one of the differences is that in those 7 years, we would rarely be looking at a transaction where a state-owned enterprise from another country was involved. And likewise, rarely would we see a sovereign wealth fund involved. Those are things that have evolved, particularly since about 2005, where they become far more important. In the oil and gas sector, I'd say if you're not dealing with SOEs, then I don't know who you're dealing with. I mean, the largest private sector company in that sector is ExxonMobil, which I understand is like number 13 in the world in terms of its volume. So you're dealing with SOEs. So for Canada, where we have enormous needs for capital investment in order to develop the resource that we have, I don't actually know how we're going to go about doing that without a very strong role being played by the SOE communities. Now, I think Tom has put it exactly right in terms of what our members would say. They'd say, rules are rules, that's fine. They need to be transparent. We need to understand how they work. And then we can make an evaluation of whether we're going to be able to successfully acquire something or not. As minister, and I hasten to point out that Tom's colleague, Kevin Lynch, was my deputy for a number of those years. Peter Harder was my deputy as well. We all found a little bit of ambiguity kind of useful. Now, in my 7 years, I never said no to a single transaction. But the ambiguity gave me the ability every once in a while to take a company's arm, twist it a little bit to get them to, make some concessions around jobs or research and development or something else that was an objective. So ministers are always going to want a little bit of flexibility. They don't want to set a hard and fast rules that they can never break free from. So the secret is that you need a little bit of balance. And I think for Canada, the Prime Minister, in accepting the investment in Nexon, said, We used to have a state-owned enterprise in the sector ourselves. It was called Petro-Canada. We sold it off to the private sector so that the Canadian government wouldn't be involved in that business. We're not interested in turning our resource over to somebody else's state-owned enterprises when we don't want to have one of our own. Fair enough. I think that played well politically, but I think that Canada is going to be confronted with the fact that it needs the investments and a little bit more development of what the approaches should be is going to be required. I think we'll see that coming over the period of time ahead.
Thanks, John. Mr. Yu, COFCO, as you mentioned earlier, is pretty much a consumer-facing brand. You deal with consumers every day. And both in Canada and China. So you deal not only with consumers, but as well with different culture. It's such an environment, actually. How do you brand yourself? What are the challenges for COFCO to better brand themselves? And I really have access to the consumer marketplace. And it's key, actually, in the global marketplace.
Yeah, well, thanks, Martin. I think, COFCO has been come a long way from a trading company, purely import-export company, and growing into food ingredients and consumer branding company. Today, to putting these two business, commodity business and branding business together is basically a big change, big challenge. As a single company, you would rather to focus on the commodity business because the business model is simple and clear, or you would rather focus on innovation and branding business. So the reason to put the two business models together, I think the simple objective is try to catch up with fast-track growth in China, because urbanization is going to drive the consumption, not only by volume but also by new product. So that is challenging COFCO very much. COFCO is from commodity company, and we're gonna change the value people see the business. We're gonna allow the failure of new product innovation, and we gotta get down to the consumer very closely. Other than that, COFCO used to be a commodity company. You would rather focusing on the market change, the commodity price, and manage the risk. And now you talk more to the consumer. You talk more to the where is the potential market? What is the right product the consumer needs? So you put a lot of time and energy and money you invest in the research and market. So I think the biggest change is how do you foresee the market change? How you build your product innovation capability. So that is right now still a major change for COFCO. So for the transition from commodity and balance the capability from commodity and risk management to a product-oriented business model. So that I think we're still struggling, but I think we're good. Right now we're building the portfolio of milk business and pork business and beef business. So I think we're building the right business. Because today in the protein industry, the consolidation is a long way to go. There used to be a lot of small companies. Food safety, that drives consolidation of the industry. Because you got to be big enough to bear the risk. And also the innovation, you got to make a lot of investment. That also drives consolidation. And that and the consumer branding business also drives COFCO, partnership with our foreign partner, like COFCO partner with Coca-Cola in the beverage business, COFCO partner with Danone and Ala Foods in the milk business. So that drives COFCO business. Building much larger portfolio and drives fast growth and also balance, even up a little bit profit level. Commodity price going like this, fluctuating, and today profit level stable and going steadily higher. So I think The challenge, we got, still focusing on the product innovation. I think that's the major challenge for COFCO. Regarding the potential, China and Canada's got a very good, agricultural products, and there's a companies very good at innovation and with a good branding in local markets. So we're also looking into those areas and see if we can build some partnership, with local companies. Hopefully, Martin, we can introduce some companies, in Canada, and we can do something in China, like what we do with Tom, with BMO in China market.
Like Mr. Lee, basically in the same sort of question. We're talking about branding with COFCO. Of course, Nixon now that you own, it's a foreign ownership. How do you manage to make sure that you're going to be seen as a local business? How do you get rooted into the community? And what have you been doing over the past few months in order to really make people understand that Nixon, of course, is there to stay, and Nixon as well will be there to support the community?
Now, first of all, it seems like, before we acquired Nixon, we are already operating, in the 6 continentals over across 20 nations. Our strategy, for us to go international, we truly believe that we have to be local. So there are 3 fundamentals we are looking at. It's a win and win. So do we have the base to support that? The long-term focus. So if to be local, if you are short-term focused, you cannot be local. Then also the economic. The part of local and economic, part of the local community. Last 7 months, what we have done. First of all, we keep the local management and the employment opportunities there. With the vast opportunity in the future, that will create the job opportunities for Canadians. Also, we truly believe, you have to be part of the local community. The last 7 months, we have been donate. For instance, like in Calgary, we donate 1.5 million Canadian dollars to Calgary Public Library. This donation is the single largest donation in Canadian Public Library. This is I was told, in the last 100 years. That will make a difference. Because average Canadians, whether you are professionals or housewives or government officers, you need books. Everybody is using public library. We think that this is something we need to contribute as show us the contribution as a local company. This is, we truly believe in a good corporate citizen, and with long-term focus, make the local, company different than other international companies.
So now I will allow a few questions from the floor. We have 5 minutes, and before we do that, I would like to remind you that at the end of the session, don't forget to leave the headsets on the table, please. So is there any question? I have one. Mr. Milroy, of course, when we're talking about going global, I would say that BMO is a very good example, and it's probably an understatement. Very aggressive in the States, and the second market for BMO probably be China. What's interesting is that when people look at China from outside, it is seen as a very, very difficult and tough market. how have you been able to achieve such success, and what were the challenges that you faced?
We start, when we start thinking about where we're going to go, we start thinking about our clients. And so we want to go where our clients are going, and we want to grow with our clients. So China, the opportunity in China for us was really, we saw it as being a great opportunity for our Canadian clients and vice versa for the Chinese clients in thinking back about Canada. When you look at the two countries, as people have said on the earlier panel, each has a lot to offer to the other. And so, that's how we came to kind of put the footprint and have what we had. And when we look at China, it's a country it's the largest market, it's growing, so it's very easy to say we want to be a part of it. When people talk about it's not easy to be in China, I think that that often stems from them thinking we want to come in and we immediately want to get to where we want to get to in a very quick fashion. And we've taken a much different approach, and it's sort of the core of how we do business back in North America, which is be very long-term and thinking about our relationship with our clients. So when we come to China, we've taken really that same approach. We've taken the time to learn about the local marketplace. We've taken the time to build our client relationships and grow with them. We really think that that's the kind of key factor in being successful in a place like China.
My last question for today to my former colleague John Manley. It's an easy one, John. We see. Canada and China signed about almost a year ago now a FIPA, Foreign Investment Protection Agreement, which is, of course, basic and important for the investors. Has been enacted and ratified here in China, but not yet in Canada. You heard Minister Baird today in his speech. It looks rather promising for the Canadian side, and it looks like FIPA will probably, hopefully, be enacted soon. Any comments about that, about the FIPA, about the structure of the FIPA that we've signed with China, and about the enactment of the ratification coming up soon?
Well, I think we've all wondered, those of us that are interested and concerned about this, why it's taken so long. What I heard the ministry stood right there in front of us all. What I heard him say was that it will be implemented soon. So I think that's good news. I applaud him for being forthcoming on it. I take soon as meaning in the mandate of the current government, which is over the next 2 years. So I think that's good news. Now, back in Canada, there are lots of, especially academics, who are critical that FIPA isn't good enough, it's not strong enough, it goes through the OECD model, it's not the most, that's the agreement that we've negotiated. It's an important step to give a framework around our investments going both ways. And I think that the business community will welcome seeing it implemented on both sides. So I think we've had a very important announcement from Minister Baird today, and I think that we should applaud it.
And I've heard exactly the same. So
there we are.
Thank you very much for our panelists to share your experience today. Very, very interesting.